Hello, beautiful people. Welcome to another brand new episode of the ITU Forex class. In this week's edition, we're actually going to be talking about the ADX indicator. Okay, so we're basically going to be talking about what it is and how to use it to improve your trade timing and how you actually find low risk, high probability trade entry. And this is more to do with entries rather than exits. Okay, so but you could also use them for exits. But just like with everything in trading, there are pros and cons to both approaches. Okay, so without wasting any more of your precious time, let's dive right into it. Okay, shall we? So what exactly is the ADX indicator? So ADX is actually short for Average Directional Movement Index indicator. Okay, so for you to locate the ADX indicator, what you need to do is to, if you're using the MetaTrader platform, as it's the most popular trading platform for CFD Forex traders, what you need to do is just to hover your mouse's cursor over the navigator tab, and then once you're on the insert tab, you would like to hover your mouse's cursor over the indicators tab, and you're going to find it here at the top. And you can see it's called the Average Directional Movement Index indicator. Okay, or if you don't see it there, you could just hover your mouse's cursor down below the category of trend category of technical indicators to find it. Okay, so once you find it there, all you need to do is just click on it, and then you'd add it to your chart. So we could use any of the two methods. Okay, insert Average Directional Movement Index if you find it there, but if you don't, just hover your mouse's cursor over the trend category of technical indicators, and then just search for it here in the list of indicators. You can see for mine it's here, the second indicator here. So I'll just click on it, and then for you to add it to your chart, these are actually the default settings for the indicator. You don't need to change much here, but I'll actually show you how I use it personally. Okay, this is just my personal preference. Okay, so if you want to see how it looks, the default look of the Average Directional Movement in the Index indicator, you just click on OK, and it's going to add everything, the indicator with its default settings to your charts. Okay, now one thing you need to know about the ADX is that it helps you to quantify the strength of a trending move in the market. But then it's that strength that is showing you is actually let's say directionless to some extent. What I mean is, contrary to what you think about most indicators, especially oscillators, is when price is kind of moving up, for example, you would expect the oscillator to also be moving in the in the bullish direction. Okay, and if price was moving down, then you would expect the oscillator to also be moving down. Okay, but with this particular indicator, it doesn't care about the direction of the move that is occurring on the charts. So what I mean is, whether you have a bullish trending market or a bearish trending market, when the indicator is showing you that there's a strong trending move in the market, it's going to show you the reading for the strength of that move, regardless of the direction of the move. Okay, so whether the market is going bullish, if the indicator is showing you that there's a strong trend, which I'm going to show you exactly how to find, if it's showing you that there's a strong trend in the market, it's going to show you the same way it's going to show you for a downtrending market with no distinctions. Okay, so moving on. Okay, so as you can see on the chart, this is the default look of the Average Directional Movement Index indicator. Now, one thing you need to pay attention to is, personally, and a lot of traders actually don't use the plus K and plus negative plus DI, and negative DI settings of the indicator. You could see it's the dotted lines you're seeing on the chart here. For the plus DI, you could see it's yellow green and it's a dotted line. Okay, right below the main ADX line. Okay, and then the other one is colored, the minus DI is colored with the wheat color, and it's also the dotted lines in the indicator window here. I personally don't use them, and a lot of traders who I know use the ADX indicator to identify the direction of the strength of the trend in the market usually don't use them. So what we do is to just make it that they don't clutter our charts. We'll just in the what do you call it, the color palette here for that particular setting or feature of the indicator, you're just going to click on it and then select none for the colors. Okay, so you're basically making it disappear from the charts. Okay, and then the other one, the same thing, just click on the color palette and then click on none. Now for this one, which is the main one we're going to be using, the main ADX line, some people like to leave it like this, you know, with a kind of a slim line, and that's just what they want to see. But I prefer to make it a little bit thicker so that it will stand out on the charts more. Okay, now we're going to do other settings to this, but for now I just want us to see what we've been able to achieve. Okay, so I'll click on OK, and you can see it just looks clean like this on the charts. You could change the color for this, it doesn't really matter. You could change it to whatever color fits your preference for the main ADX line. Okay, now with that out of the way most traders use the ADX indicator is they wait for it to go from below the 25 level line of the indicator to crossing above it and moving in an up direction, in the up trajectory. Okay, so basically when that happens, this is telling traders that there's the beginning or the emergence of a strong trending move in the market. And so if you identify, if you're a trend trader, for example, or you identify a trend trading setup, then if the indicator, the ADX indicator, the ADX line is moving from below 25, the 25 level to above it and moving to the up direction, then there's a very big chance that that particular move that you're seeing on the chart is going to be a strong move in whatever direction you actually you identified the direction of the trend for that particular move. Okay, so now you can see with the settings we've done for the indicator now, it's kind of a little bit difficult for us to see the exact 25 level reading. So if you wanted to do it manually, you would have to click on the crosshair tool here, and then you'd when you come to the indicators window, you'd have to kind of find where the 25 level reading for that particular indicator is, and then you'd wait for price to cross above that level, and then when you find a trade setup in the direction of the trend that you've identified, you take advantage of that. But this makes it a little bit tedious, and since it's not clear to see at a glance on your chart, you might miss a couple of trade setups because of that. And so what is more advisable to do is for you to click on the indicator settings, okay, and then you go to levels. Now if you added it the way I showed you to add it onto your charts, you're going to see something like this with no settings for the levels and whatnot. So what you would want to do is click on add, and then here, since we're talking about the 25 line level reading of the indicator, you're going to type 25 here, and you can color this to whatever color you suits your preference. Okay, I'm just going to make it color it black. Choose the color black in the color palette and keep this as a dotted lines. Okay, so that is just going to stand out on the chart on the indicators window clearer. Okay, so I'm going to click OK, and you can see that now we have this dotted line running across the 25 level reading on the indicators window. Okay, so now we've finished setting up the indicator the way we want. And just like with any other indicator in inside the MetaTrader platform, if you prefer to have it only be displayed on some time frames and not on others, then you could uncheck this all time frames box and then select the time frames that you want it to be shown on. But for this particular instance, I don't need to do that. Okay, so I'm just going to click on cancel. Now let's go through a couple of quick examples to see how this indicator would have helped you to identify low risk, high probability trading opportunities in the direction of the market's prevalent trend, okay, which is strong by definition, because that's what the ADX is helping us to do. Okay, so how many of you here remember what we talked about when we talked about market structure in the markets? Okay, if you've been attending the what do you call it, the ITU Forex classes, then you know we've talked about market structure countless amounts of time. But for the benefit of those who are just joining us, let's do a quick refresher. Okay, so basically, when price moves in the market, and that move is as a result of a trending market condition, whether it's an up or down trend, price does not just move haphazardly in the up or down direction. There's a method, and there's a method to the madness, okay, if we would call it that, that price use to move in the market. So for an uptrending market, usually what you're going to find is that price is going to form a high, and then it's going to pull back a little bit, and then it will go up to form a high that is higher than the previous high, that is going to break above the resistance that it failed to break above previously, and then it's going to make a pullback, which ideally for a healthy uptrending market, that pullback should be nowhere near or break below the previous higher low. Okay, so this is going to continue happening. That's the formation of the higher highs and higher lows, as long as that particular uptrending market is healthy, that uptrend is healthy. Okay, so this is going to continue forming. But like with anything, everything in trading, I keep telling you that these things don't last forever. So when there's a trend in the market, that trend does not last forever. Then there's definitely going to come a point in time where price is going to find it extremely difficult to break above the previous resistance that it failed to break above. And so when it retests, it's either going to fail to retest it fully, or it's going to just slightly break above it, and then that's going to be a fake out, and then it's going to come back down. Or whatever the case might be, price is just going to find it difficult to keep breaking above the resistance and continue forming higher highs and higher lows like it did previously. And that's a warning signal of a reversal in the direction of the trend in the markets. Okay, so now this happens for both uptrending markets and downtrending markets. Okay, now when we look at the charts closely here, what you'd notice is that price was actually moving in the direction of an uptrending market. So we had what you would call the market structure of an uptrending market. Price moved from here to form a higher high, and then it formed a slightly low, higher low, and then it broke above to form a higher high. And here we had the formings of the initiations of what looked like price wanting to start staging a reversal, which didn't go successful here because eventually price continued up and broke above the previous resistance. So even though it looked like we were about to have a reversal, that didn't happen. Okay, and then eventually price now continued forming higher highs and higher lows. But this is where we had price struggling to continue with the uptrending market. Okay, market structure, which is the formation of higher highs and higher lows. So eventually, when price came to this resistance, when it came again here, it couldn't even test it to form a double top or whatever chart pattern you might have learned based on this type of price action. Okay, so this was telling us that the bullish trend that we identified on this chart is beginning to weaken. Even if we're not seeing a reversal, for example, then it's beginning to weaken, meaning the bulls that were pushing this trend up and up and up are beginning to get tired, and so this is beginning to weaken. Now, if you were using just the typical trend trading approach and you don't pay attention to the strength of the trend, and you're just trading when there's a pullback or there's a breakout for a trend uptrending market or a downtrending market, you don't care about the strength of the trend, you just take the trade, then you would have taken a lot of trades somewhere around here, okay, when price was just consolidating inside this level of horizontal support and resistance, somewhere around this level. Okay, but you could see clearly now in hindsight, it's very easy to see that price was just stuck in a range. Even though price was forming higher highs and higher lows, and it kept advancing and advancing, when it came to this area, it got stuck in between this range of horizontal support and resistance. We had a couple of fake outs to the downside, fake outs to the upside, but eventually price was just stuck in this range for a couple of months because this is the daily time frame. Now pay close attention to what this indicator was showing you. So when price was stuck in this range of horizontal support and resistance, look at what the indicator was doing. It was moving quite all right, yes, but it was trading below this. The indicator was just trading below the 25 level line, which is telling us that, and remember, with the ADX indicator, when it is below the 25 level line, it is basically telling you that the trend of the in the market is a weak trend. So for us to consider that the trend has moved from being a weak trend to now gaining momentum, we need that indicator to break above the 20 level line and then start slanting up, start moving to the upside. And this is where that happened. You see, where we had this breakup above this resistance, this resistance that has proven to be a very strong resistance for a lot of times when price came in touch with it, until it broke here. And the indicator was showing us here. So just think about it. If you had, after you'd seen all of these things happen and you saw this breakout and you looked at the ADX indicator and saw that it broke above the 25 level line, signaling to you that the trend that is beginning to form in the market, that is developing, is actually a strong trend. Just imagine what would have happened if you had taken a buy trade here with a tight stop loss or conservative. It doesn't really matter, depending on your trading style. Okay, if you're like, we've talked about this stop loss approach method countless times in countless classes. If you're an aggressive trader who doesn't really care much about taking, losses and losses and losses in a row, then your stop losses are going to be very tight. Why? Because for an aggressive trader who has a tight stop loss, because your stop loss is very close to your trade entry, by virtue of that, you're going to have your stop loss being hit a lot of times. So your win rate is going to be much lower. But that is going to be compensated for by having a high reward to risk ratio. So for somebody that has a very tight stop loss and is trading with maybe a 1:5 or 1:6 or 7 or 8 or even 10 reward to risk ratio, then you could lose 5 or 6 trades in a row, and just one winning trade will put you up, with a very decent amount of profit. But for somebody who doesn't like taking back-to-back losses and prefers going, with the conservative approach, yes, your win rate is going to be slightly higher than the person who has a very tight stop loss, but it's going to come at the expense of your reward to risk ratio, because for somebody who is using a very conservative stop loss, the distance between that person's trade entry and their stop loss is going to be very far. And so if you're aiming for a 1:5 or 6 or 7 or 10 reward to risk ratio trade with that approach, then it's going to be much difficult for price to hit your profit target, because it might take very, very long for that to happen. Okay, so you just need to pick and choose which one of these methods you resonate with the most, and then adopt it and test it before you implement it. So for this particular trade setup example that we're using, if we had used the aggressive stop loss approach, let's say after the breakout of price above this level, you just place your stop loss just below the candle, because this is the daily time frame. Pay attention, okay? So let's say you just placed your stop loss below this candle that price broke below, above this resistance area, and you're aiming for maybe 1:5 or even 1:10 risk to reward ratio. Look, price would have hit your profit target. So you would have taken this trade, it would have lasted a couple of days, but eventually it would have hit your profit target. But if you are somebody who was using the, the conservative approach, and then after the breakout of price above this resistance area, you took your trade with a stop loss below the level, because if price was to come all the way up here to break below this higher low, then obviously we're not forming higher highs and higher lows. So we're not forming the market structure of an uptrending market. We're no longer in the trending market. Okay, so this is a point of validity stop loss. So assuming you took this trade, because by virtue of the trade, look at the distance from the trade's entry to its stop loss, you can see that for price to even hit a 3R profit target, it would have taken quite the distance. But in the argument for this approach is that your stop loss is going to get hit a lot less by fake outs and trades and stop loss hunting and all of those things. So you just need to pick and choose which one of these methods you resonate most with, and then test it out to prove its validity and its profitability, and then adopt it before using it. So moving on, if you had used this approach to trade when price had broken above the 25 level of reading of the ADX indicator, you would have caught, in essence, this is what I was just trying to show you, you would have caught a very good trade, because when the ADX signaled that price had broken above this level, that's when this very strong trend began. Okay, and that's basically what we use the ADX indicator for. We use it when there's a trend in the market to identify the possibility, the likelihood of the strength of that trend. Okay, so moving back again to check another example, you can see that this ADX was, just hovering above here, but then all of a sudden it went below this 25 level reading. And what does that tell us? The strength of the trend in the market is not that strong. It's actually quite weak. But then eventually, price broke above the 25 level. I said price, I mean the ADX indicator. It broke above its 25 level reading, signaling to us that it looks like the beginning of a very strong trend is underway in the market. So it broke above the 25 level reading here. And then we had a slight pullback below it again. But then when the move was solidified, you can see that it broke above this level again. And this was the start of another very strong move. So you would have taken this trade again with any of those two approaches, whether the tight stop loss, the aggressive approach, or the conservative approach. But the lesson here, the thing to learn is that the ADX indicator, we use it so that it shows us the potential that there's a strong trend in the market. When it goes from below the 25 level reading mark that we drew on our charts, the level we added to our charts, and it breaks above it to show us that there's a strong trend underway in the market. Okay, that's basically how we use the ADX indicator. Okay, so again, let's look at another quick example of this. Here, we've looked at examples of trades that worked out for this. Let's look at a couple of trades that didn't work out, because as you know, with trading, you're not going to win 100% of the time. And in fact, whatever trainer or coach portrays that to you is not setting you up for success, because when I only cherry pick the trade setups or examples that I show you to only show you trades that would have worked out, I'm doing you a disservice in the sense that will give you a false sense of confidence that you're going to get winning trades whenever you use this method. And so risk management is not all that important because of that, which it couldn't be far from the truth. The reality of trading is that no matter how good a trading methodology is, you're going to get winning trades just like you're going to get losing trades. Okay, so if you don't prepare properly so that the winning trades that you get bring you more than enough profit to cover for the losses that you take with those losing trades that you take inevitably, then that's not setting you up for success. Okay, so again, the ADX indicator moved from below this level, 25 level mark, which is showing us that there's a weak trend in the market, to above it somewhere around here. And you can see that we had the formation of this very strong bullish bar here. And so let's assume you took a trade here, okay, at the close of this candle, and you can see that clearly this candlestick had broken above this resistance area, which price was struggling to break above previously. So if you're using the aggressive approach, your stop loss would have been just below the candle, because again, this is the daily time frame. Okay, so let's say you took this trade and you were going for the usual 5 to 10 or 10 to 1 risk to reward to risk ratio on this trade setup. You see, you would have entered the trade here, price would have moved all the way to like 4R in profits, but then you would have come back to your trade entry level, and eventually you would have hit your profit target. But just imagine sitting through this trade. You watched it go from here to all the way like 4R in profits, only to come back to break even. Some traders would have closed it, but if you're following the plan and you're sticking to your rules, then you would have held on to the trade and you would have easily hit your profit target. You would have even stacked more trades with it. Okay, so this is just to show you that some trades will just go, easily to hit your profit target. Others don't. Others will, tease you. They will show you profits and then come back to losses, and then they're going to tease you like they're not going to work out or they're going to work out. All of this is testing your patience. And that's basically the main thing with trading. It's going to test your patience. Are you going to stick to the plan? Are you going to stick to the rules? Or are you going to close trades prematurely just because you saw price moving profits and then come back, to act as if it's going to hit your stop loss and all of that? Okay. So again, this is how it works. Okay. So basically, this is how you use the ADX indicator to identify the strength of the trend in the market. When the ADX indicator, the main ADX line, is below the 25 level mark, then that's basically telling us that whatever trend we have in the market is not a strong trend. But when it crosses from being below that level to above it, then that is a signal that is telling us that there's a potential that the trend that is forming in the market right now is going to be a very strong trend. And so you want to position yourself in the direction of that trend so that you can take advantage of that move. Okay, so this pretty much brings us to the end of this week's edition of the ITU Forex class and how to use the ADX indicator. Okay, and yeah, this is how you use them. Go out there and test it out. Don't just come to these classes and just watch a thing or two and then you don't do any testing, or you just take notes and don't work with it. That's not actually how it works. You need to take notes, then go out there and practice, whether it be on a simulated trading account or a demo account, whatever the case might be, so that you familiarize yourself with the thing, make it your own, customize it to fit your trading personality, and then test it out, prove that it works before deploying it on a live account in the live markets, and start making money with it. Okay, so again, thank you for taking time out of your busy schedules to attend this class. I sincerely appreciate it. But before we round up the class, I would like to use this opportunity, as usual, to invite you guys to test out or try out our suite of bots, which are designed to help you find low risk, high probability trading opportunities in the Forex markets or the gold commodities market with the gold ITU gold mine, okay, indicator, which is expert advisor, which is designed to help you find low risk, high probability trading opportunities, whether you're not in front of the computer, whether you're fast asleep or out there doing what you want to do. It goes and does its thing for you on autopilot. So if you're interested in the other bots that are custom designed to trade Forex for you, please reach out to us on any of our social handles or drop a comment in the comment section, and we'll be more than happy to assist you, walk you through setting up everything step by step and taking advantage of the bots. Okay, so once again, I look forward to seeing you guys in next week's edition of the class. Have a wonderful rest of your week, and God bless you all. Cheers.